And we should be good to go. Okay. Welcome everyone. My name is Steve Nurre. I know many of you were trying to get into the class on Monday, and I apologize for those of you who have been following news here in the U.S. I live in the Midwestern U.S. in a city called Indianapolis, Indiana. We've just had a crazy month of weather here in July, to where we had consecutive really bad thunderstorms, tornadoes rolling through, and lost electricity in my office and house for 24 hours, and it was just a mess. So I appreciate your patience on that. Um, First, as I get started here, let me just kind of, I'll bring up some things here that we're going to need for the classroom here this morning. Bring up my Metatrader, bring up my Word document. I'll bring up PitView here because I want to start from scratch. The reason why I created this little two-part series on swing trading is for many of you that are in class right now. You come to the live trading room on Monday, Wednesday, and Friday mornings at 9 a.m. And this was based on student request of just people that come in the live trading room sometimes have a hard time following along, mainly because I make a lot of assumptions as the instructor of what you're actually seeing. I make assumptions based on the fact that you may already know what I'm going through. So a student asks, hey, can you do some separate sessions on just what the strategies are actually going over in the live trading room, and give us a little bit more details on how you're trading it? And essentially in this two-part series, today is going to be highly interactive. I'm not going to use a PowerPoint. What I'm going to do today is, because it really is simple, is going through more on setup and kind of some of the more simple methods that we trade in class, including reversal and retracement, consolidation, momentum, reversal, and retracement. And a lot of it's going to be based on a lot of just of the basics of what I cover in the live trading room. And don't get me wrong, folks, we go through a lot more than just swing trading strategies. It's just, if you're running a live trading room, you often tend to trade and put more trades out there based on your own personal style. And my own personal style for quite some time has been, swing trading off of 1 hour charts. I've traded it all, folks. We trade, scalping methods, short-term methods, long-term methods, news trading. To give you a little bit of background on myself, I know I don't do that often in the live trading room. My name is Steve Nurre. I'm the instructor here at Advanced Market Systems / PitView. I've been trading for 20 years. And no, that doesn't mean that I've been sitting in a house, looking at a personal computer. I started off as a professional options trader on the floor of the CBOE. I worked as a senior options trader for the largest option at the time was the largest options trading desk in the world as far as volume that went through it. I've taught for the exchanges, CBOE, CME. I've taught for many exchanges, and I've also taught for many big-time brokerage companies. I've traveled the world teaching options, futures, Forex. So as we get started here, the reason why I'm going over my background is a lot of people get a little disappointed in how simplistic my view is. Most people would call me a naked trader. I trade more on price action. I don't put a lot of indicators on my chart, and a lot of people get disappointed by that. The reason why I tell you this is because I've come full circle in the last 20 years as a trader. I started off trading very basic, and then I started getting into indicators, MACD. I had to teach this stuff to people, so I started using it in my trading: CCI, MACD, stochastic, RSI, all these different indicators, and I traded with them, and with basically all of them, Bollinger Bands, you just name it, and I've traded with it. And now it's in the last 6-7 years, I've just gone back to really just more naked trading, just trading off price action. So I thought the best way to open up this two-part series, today's, like I said, is going to be very interactive. I'm just going to go through kind of some of the simple methods. If you look at our PitView worksheet, I actually have some strength. I'm sorry, I was reading what it said on here, trading USD strength. Some trades that we were going over in the trading room earlier this morning actually fit consolidation, momentum, and retracement perfectly as far as the way we would look at it, or reversals, if you will, as far as how we've been trading in the live trading room up until this point. And so what I thought I would do is just go through how I set up my PitView. Very simple. the way I do it, using total view, pair view, the PitView indicator, the trade manager, and how I set up my charts, and then get into more of the simple strategies that we do in class: consolidation, momentum, reversal, and retracement. It's funny how when you've been trading so long that your trading strategy actually matches more with what most people would learn in technical analysis 101. You know, on their first day of learning technical analysis, you learn things like support and resistance, horizontal support, horizontal resistance, trend lines, and I also use Fibonacci retracements, which in part 2 of the class, when we get into like Gartley pattern and a little bit more in depth into the PitView indicator on Friday afternoon, we'll go through a little bit more on the PitView indicator. But today is going to be more of just the basics of it. So with that being said, let me hold on one second. I need to unshare my screen real quick because I need to relaunch PitView, because I forgot I actually had to restart my computer, so it's not it's disconnected. So I need to reconnect the PitView, because that would be bad if we didn't have that available. Here, reshare my screen once again, and there we go. All right, so now I got everything back up. We're good to go. So first, let me just go through my setup as far as what I look at every day. Now, obviously, I'm using one computer and one screen here, but I'm going to go through how I set up my entire PitView setup for when I do my swing trading, especially when we do it in the live class in the morning. And that should erase a lot of the doubt or a lot of the confusion, if you will, of how when we go into the live trading room of what people are seeing. Let me first start with, I'm going to go to the bottom here with the charts, because this is really important, because I want to be able to put I need to add the PitView into my charts. But just to give you a view of how I start off my trading day and how I look at the market using something we call comparison analysis, let me go ahead and get my chart set up out of the way first, because once I get my chart set up, I don't even have to have this market watch over here anymore. What I generally do when I start off my trading is I want a complete view of the market based on the time frames that I'm using. So what I usually do is, I'm a big dollar trader. I always have been. The dollar, especially in the last several months, has been the driver of the market, meaning a lot of the movements that are driving the market are either driven by dollar strength or they're driven by dollar weakness. Obviously, the dollar being the number, being where 95% of all Forex transactions are done in these dollar pairs. What I usually do is I'll just set it up to where I have all the dollar pairs on my screen. So from the market watch on the Metatrader, all I did was I just clicked and dragged all the dollar pairs, and I have them listed here in the top part of the screen, over to my Metatrader charts. And I can minimize by clicking the X on the market watch now, go to window, go to tile windows, and now I have all my windows open with all the dollar pairs. I got euro dollar, pound dollar, dollar yen, dollar Swiss. Here's are my commodity currencies: Aussie, New Zealand, and Canadian. I generally don't like black charts, so I have my own template that I created, which you can change the colors on Metatrader. This isn't a Metatrader class, so I'm not going to go through it. You can change the colors. I have a basic template that I use because the white background charts are a little bit easier on my eyes when it comes to trading. Don't like the black background. So I usually have all of those listed on here. The reason why we have to start with the charts, and again, just taking you through the basics of what we go through in the live trading class, the reason why I have to do this to my charts first is because I want to show you the first thing you have to do really when you download PitView into your system is to make sure, at least, even if you're looking at all the charts on here, which you can see dollar strength has kind of been driving the day to day. You see the dollar strong against the euro. It's been a little bit weaker versus the pound. However, it's been showing a bit of strength here this morning. Strong versus the Swiss, strong versus the yen, strong versus Aussie, strong versus New Zealand, and strong versus Canadian. But before I pull up my PitView indicators, what I need to do, if I go under View and then go to Navigator, when you download PitView under your Expert Advisors, you're going to see, take off my account numbers here. You're going to see PitView trading on here. What you do is you just click and drag the PitView trading onto one of the pairs. Like in this case, I click and drag it over to the euro dollar. Click on OK, and that should put your Expert Advisor, your PitView trading on here. That means that we can manage all of our charts and our trading from PitView instead of just the Metatrader. So that's why I had to go to the charts first. So now you see the PitView trading indicator up here on the top right-hand corner. In order for it to have a smiley face, auto trading must be turned on. This little button up in here, auto trading, must be turned on. That means your Expert Advisor is linked to PitView, or the PitView trading is linked to the actual PitView software. All right, so I got also somebody just asked a question on dollar Canadian. Yes, I am kicking myself on dollar Canadian this morning. This morning, our live trading class, I was telling students, by the way, sorry, this is kind of an off subject, but I'm also a big news trader. And I told people this morning that I would favor buying dollar Canadian before their interest rate announcement this morning. At the very least, I thought Stephen Pelosi would be very dovish on the Canadian economy and dollar Canadian would go up. I came very close to pull. Thank you for mentioning this, Phil, by the way. Thanks for beating this in or reminding me of this. But I came very close to pulling the trigger because I told students I would favor buying dollar Canadian with at least a 50-point stop and limit before their interest rate announcement this morning, because I thought at the very least Stephen Pelosi would be extremely dovish. But I hesitated on that before the interest rate, and I didn't. And I told the class this morning, I said, I'm not going to do this trade. I'm already short euro dollar, long dollar Swiss, so I'm not going to do the dollar Canadian. And it did come out, not only was it dovish, but they actually lowered their interest rate 25 basis points, which obviously caused that to go up 100 pips. So if you did take at least my view on that, you would have made about 100 pips actually per the gap on that trade. Sorry, I had to segue there because somebody asked from the live trading room this morning, asked about the dollar Canadian pair. So here I am, my Metatrader set up, and we're only using one screen, so I'll also show you how I turn my PitView on and how I add my PitView indicators. Right in here under my setup, you can see what I do here. How does one get in the live trading room? What are the costs? There are no costs associated with the live trading room on Monday, Wednesday, and Fridays, Lindley. All you have to do is click on the link on our website and sign up for the live trading room every morning. And Lindley, I did get your reply to the email. It was when I was going through all the the debacle the last couple of days with the weather. If you want, I can send you in my reply. I'll send you the link to sign up for those live trading classes. It's no problem. Sorry, it's been so delayed getting back to you on those. It's just been an awful couple of days. So first, let me show you how I set up here. No problem, buddy. I will get those links out to you. No problem at all. So let me go through the setup first of how we start off. From a total view standpoint, I'll show you how I set up my total view. I just need one instance of it. I know a lot of people like having a bunch of stuff on their screen, and I'm just not that guy. One instance of total view, and I usually have 3 instances of pair view on my screen, and I'll show you exactly how I have these set up here. Whoops, there we go. So when you first pull up the PitView software, what I usually do is I'll go up here to under indicators, and I'll pull up total view first, and I'll show you how I customize that here in just a second. That'll bring the total view up. And then under indicators, I'll left click on pair view, and I'll bring up 3 instances of pair view. You should be used to in the live trading room seeing my 3 pair views up here and at the top. And that's really, other than the PitView indicator, which I'll get into here in just a second, these are really the only 3 things. I only have 3 up. I've seen so many people that have really busy screens with the PitView indicator on it, and this is all I really need for my trading personally. Let me go into how to customize this though, because I'll start off with the total view. Let me go in and kind of show you. You see my time frames on here on the total view, and I'll write them down on here for you also, so I can share this with you at the end of the class. But my time frames, oops. These all match different time frames that we use in class: 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, 8 hour, and probably my favorite is the 24-hour total view. To change the time frames on total view, and this is why I'm doing this, just to show you how I change them, because most of you, when you log in, you don't know how to change the time frames. When you first pull up total view, if you right click on it and go to change time frames, LP type up here, this stands for liquidity provider. Now there's 3 types of actions that we track from liquidity providers: leading, following, and totals. I always keep track of the totals. I don't look at leaders or followers. Leaders is basically whenever a market maker leads inside the bid and ask, means creates a new bid or ask price. That's called leading inside the bid or leading inside the ask. Whenever a market maker follows another market maker to the inside bid or ask price, that's following. And totals is an algorithmic total of those two actions that the market maker has at the bid and ask price. So under LP type, I have it set at totals. And then from here, you just got to go change your columns. You can see I have column 1 at 5 minutes. Oh, I'm sorry, 1 minute, then 2 at 5 minutes, column 3 at 15 minutes, column 4 at an hour, 5 at 4 hours, 6 at 8 hours, and column 7 at 24 hours. The one that I generally use the most often is right down in here, the 24 hours, especially when swing trading on the longer term charts. These are all 1 hour, I'm sorry, these are all 1 hour charts, by the way. All these charts over here are 1 hour charts that I have these set at. That's where my swing trading is done. Sorry, I forgot to add that. On Friday when we do part 2, I actually have a PowerPoint that I'm going to be going through to kind of not just wrap things up, but when I go through some of the more advanced material, I have a PowerPoint presentation set up. This is more about just how to set up the more simple portions of our strategies. So once you get those done, you apply it, and you can see up in here under your total view that you have all these different time frames listed here at the top. And then all you have to do is left click, and it will take you through each time frame: 24 hours, 8 hours, 4 hours, 1 hour. And the question that just popped up on my screen says, you know, what is total view doing? The reason why I have total view up is you see my charts in the background. You see how I have all the dollar pairs. I can see how the dollar is trading against the euro. I can see how it's trading against the pound, against the Swiss, against the yen, against the Aussie, against New Zealand, and against the Canadian. Well, in total view, it's taking the bid and ask activity, the buy and sell imbalances, and it's listing the currencies from strongest to weakest over here on the left-hand side based on their buy and sell imbalances over a specific time frame. I use the 24-hour because it gives me, after a 24-hour period, when all the activity is done with the market makers, all the activity they have on the bid, all the activity they have on their ask, over a 24-hour period, whatever imbalance between the bid and ask price of all the liquidity they've been providing the market after the end of that 24 hours generally tells you where their overall positions are. So the reason why I use the 24-hour total view is because it's ranking the currencies from strongest to weakest, not based on what's happening on the chart, based on what is happening from the market maker perspective, from their bid and ask activity, buying and selling pressure. Like the pound, you can see the pound has been trumping that dollar trend. The dollar is strong against everybody today but the pound. Excuse me, I had a cough there. So the pound has obviously been one of the most well-bid currencies over the last 24 hours. The dollar, since I trade the dollar a lot, I always look for where the dollar is on this 24 hours, because the dollar has been what's been driving the market the majority of the time over the long term, the last 3 or 4 months. And you can see this is a good sign for me if I'm a dollar strong trader, because it's showing that the dollar is actually extremely well bid against all the other currency pairs. And what it does is it ranks them for who is the dollar, the strong, how much buying pressure, which individual currency, I should say, does the dollar have the most buying pressure on, is the euro. And you can see the euro is tanking right down in here. We should be getting extremely close to our max take profit from this morning's trade. And it ranks them from strongest to weakest over who the dollar has the most buying pressure, buy imbalance towards versus sell imbalances. So it ranks them, okay, the dollar is the second strongest currency the last 24 hours. Who's it been strongest against and who's it been weakest against? And this is another thing we like to see right down in here is the euro. The euro has been getting freaking crushed this morning, and it shows the euro is weakest against the dollar. You see it lists them left to right from strongest to weakest. That means our euro dollar trade from this morning is actually, and it is, doing very well, the euro versus the dollar. So it ranks currencies from most well bid, meaning buying pressure currencies, to most well offered over a 24-hour period. This is extremely important when you're swing trading, because this is what we call the prevailing trend. The prevailing trend showing the overall bid and ask activity for all the currency pairs. And you can actually scroll down here. Like this morning we were looking at Canadian right before the interest rate announcement. One of the things that caught us off guard over the last hour, this morning the Canadian was actually being heavily offered or heavily sold, but it kept on moving up the list. That's one of the things that kept me from buying the dollar Canadian before the interest rate announcement. Was the dollar Canadian over that hour-long time frame was starting to move up the list in the short term on the 1 hour time frame to get, actually, it was becoming stronger or more well bid. And you can still see over the last hour the dollar is still extremely well bid. There's a lot of buying activity on the dollar here over the last hour, and the euro is still getting absolutely crushed. And again, that's a good sign for our trade from this morning. So the total view is this. Remember, PitView is giving you information. It is basically tracking the bid and ask activity. Whenever liquidity providers are raising their bids to buy versus the imbalance of when they're lowering their offer to sell. And this just gives you a really good overall picture. What we generally do in the live trading class is we'll look at the 24-hour totals to see which ones are most well bid, which currencies are most well offered. And once I do get a peek on that, you can actually right click on it and minimize the total view. It will usually stay on top. And that's really all I need that I'll look for. And I'll get into some of our trading strategies here in just a second. In fact, speaking of trading strategies, let me pull up PitView one more time, because the other thing that we always pull up in class, if you click on TM, it'll pull up your order manager, the trade manager as I call it. And I'll usually put that on the top of the screen in their live trading environment. You can see here's our sell on the euro dollar this morning. We're actually up about 35 pips on that. We're about 15 pips away from max profit. And we also had a buy on dollar Swiss. Those are highly correlated pairs, but we kind of doubled up on the dollar today because we thought the dollar would get stronger based on its total view, the fact that it was very strongly bid. So those two have, dollar Swiss is down 10 pips. I'm trading I usually trade micro lots in the live trading class, so that's 11 pips on we're about 10 pips on the dollar Swiss and about 32 pips right now on the euro dollar. We usually keep that up here too, because that will list all your trades on here. And you can manage your trades instead of having to go back to Metatrader here on the order manager. Like if I want to change my stop loss on, let's say, dollar Swiss, I just double click on the stop loss and it will put my stop loss and take profit in. In fact, if you look here, you can see I'm risking on this dollar Swiss pair, I'm risking 48 pips. And so if I want to change my limit order and put in, let's see, 0.95, 910, you see here's my opening price. I'm risking 48 pips. per my stop loss. This is an order we had from earlier. If I took my if I'm willing to risk 48 pips to make 48 pips, I'll put my take profit at 0.95910, and that will automatically update my dollar Swiss trade to reflect those stop and limit levels. You can see them on here on the screen. Don't worry, I'll get into these trading scenarios here in just a second. I'm just kind of going through how I set up my screen at this point. The next thing that we look at is on pair view, and I'm going to go ahead and I'm going to take one of the pair view windows. I'm going to open it up because I really believe in more of a KISS method of trading. Keep it simple, right? A lot of times when you let me cancel that out. Let me just show you exactly how you probably open up your pair view window and how I get my pair view window done. When you first open up pair view, a lot of you are looking at all these different colors and all these different numbers that are flashing across the screen. You see, I don't look at all these numbers. I try to keep my trading as simple as possible. We have our one at like 1 hour. This is where we do a lot of our swing trading, is from the 1 hour charts. It says 1 hour leaders, 1 hour followers, and 1 hour totals. I just concentrate on these numbers down in here. These numbers down in here represent 100% of the liquidity provider activity. And so I really only want to look at, and the only number I really look at is the totals down in here. And I almost skipped over this, so thanks for reminding me of how I get them set up like this up in here, because it looks a little bit more simple up here than it does when you're looking at all these different numbers. What I do is, if I right click anywhere on the pound dollar in this case, if I go to show and hide columns, I don't want to look at the session leaders. These are your hourly charts or the followers, and I don't want to look at the 5-minute leaders or followers. All I have checked here is session total and 5-minute total. That's the only thing I have checked. And when you have those checked on, it's only showing me the total bid and ask activity from the individual market makers. From there, what I'll do is I'll bring my screen down. Here's your charts, by the way. If you have PitView connected to your charts, I'll usually have it on 1 hour on all mine. That's our swing trading time frame that we generally use. And I'll usually just minimize my screen so that it only shows me, instead of showing me each individual liquidity provider, all it's telling me on the pound dollar in this case is I'm looking at 100% of the liquidity provider activity, and here's my 1 hour totals, here's my 5-minute totals. 5-minute totals is something we generally will use for our shorter term trading methods. 1 hour totals is what I'll look at for the long term or for my swing trades. And then I usually just have them grouped in here at the top to where I don't have, I don't have a bunch of indicators taking up, 90% of my screen. And I'll have 3 of them up. The cool thing is, if you see, I'm looking at all 7, I'm looking at 7 of the dollar pairs on here. From here, if I pull up, you see where my PitView trading window is on this pound dollar pair, that connects my PitView to my Metatrader. From here, let's say I have the pound dollar up. If I want to switch between these different indicators, all I got to do is say, okay, well, now that I have my chart up here, if I want to look at the dollar Swiss chart, I'll just click on the chart window and it will change this chart to dollar Swiss. If I wanted to take a look at different symbols, like if I want to look at dollar Canadian, click on dollar Canadian, it will change my chart to dollar Canadian. So you can change once you have the PitView Indicator or Expert Advisor running on your chart, all you have to do is, and that's why I have 3 of them on here, so that I can quickly switch between, in this case, dollar Swiss is one we've been looking at. If I want to look back at euro dollar, just click on the chart button, changes it to euro dollar. If I want to look at pound dollar, that's another one we were actually looking at this morning. Click on just the chart icon and it will change the chart around. So then I can just easily go through from one currency pair to the other without having to change anything on Metatrader, just by one click away from essentially looking at my individual trades. And then the order manager is really good because you can close out your trades from up here without having to have your terminal on the Metatrader. All you really need on the Metatrader is your charts. And that is generally how I do it from a swing trading perspective. Did I miss anything here? Again, as far as the pair view, 3 instances showing 1 hour totals and 5-minute totals. And that's all I want to see. Somebody just asked a question about the totals. The totals, and remember, I'm looking at like the 1 hour totals right in here. It doesn't matter, like this 100% right in here really doesn't matter. You don't even have to have that on your screen. I just have it on there making sure that it's reading 100%. But the 1 hour totals, this box right in here is what I'm most focused on when I'm swing trading, these 1 hour totals. The 5-minute we always have on there just because we do sometimes do some more intraday trading using the 5 minutes, but 1 hour totals is generally something we look at very close when we're doing our live trading room. The trade manager charts, I went through that. The only thing that I haven't shown you how to do is the PitView Indicator yet, and I'll go ahead and go through that as far as how to add the indicator to your chart also and the parameters that I use, and that should take care of some of you, when you come into the live trading room, I know you ask, I don't pull up the PitView Indicator sometimes because I don't, I usually look at it before class starts because I don't like my charts to be too busy. I just like them to be very simple. So let me pull up the PitView Indicator and show you what parameters I put in for the swing trading on the PitView Indicator. In fact, I can write them on here, actually. The inputs, 1 hour, totals, candles. Let me show you what that looks like. If I go to Insert, Indicators, and then you have to go to Custom Indicator. When you download PitView, it'll automatically download here under Insert, Indicators. You go under Custom, and you see right down in here, there's the PitView Indicator. If I click on that and I go to Inputs, the session type, hours. For swing trading, we're looking at the hourly charts. The time frame, under time frame, I'll put a 1 because we're looking at the 1 hour PitView totals, just like we are right up in here. Draw type, I like having these set as candlesticks. I don't know why, but I think this PitView Indicator works very well when you're looking at it from a candlestick perspective. And then the only other thing that I'll change over here is on levels. Under levels, I'll change that. I'll put in 5 for a +5. A +5 imbalance on the 1 hour totals is usually what we use for a trigger. And then I'll put in a -5. +5 being our most normal buy trigger, -5 being our sell trigger. You can change your colors around just a little bit if you want your colors to look a little bit different. And then the 0 line is another thing that I've started to add here. Just the 0 line, kind of the neutral line, showing when the buy and sell imbalances are shifting from one to the other. Click on OK. And there I have my PitView Indicator down here on the bottom of the screen. This is extremely important now because this is what really tells us what the true nature of these buy and sell imbalances are. You know, sometimes it's not good enough just to look at a +5 or -5, like I'll show you when we start going into through some of the trades that we've had as a class. We also are able to see the trend of what's happening with the PitView Indicator, whether it's making higher highs, whether it's consolidating, or whether it's making lower lows, if you will, or if it's diverging from the overall trend. Once you have that up there, you know, I'll bring it back up, you have the indicator on here. And that's important because the most common question I get on email is, Steve, you know, it seems like these things go +5, -5, +5, -5 on a continuous basis, and it can be extremely hard to trade that way. And if you're looking at shorter term time frames, you've been seeing the imbalances go +20, -20, +20, -20. Well, being able to look at the historical data on PitView is just like it's like being able to look at a MACD or a moving average crosses or a stochastic of, if the PitView indicator is making higher highs and higher lows, it generally means that there's a lot of buying activity in the trend. If it's making lower highs and lower lows, it means that it could be more selling pressure coming from the individual market makers. The PitView indicator, I've held off on that a little bit to go through that in more detail on Friday's class, but we will go through it just a little bit today when I go through some of the different trades that we had on today as a class. And I'll go ahead and switch that over to the euro dollar pair so that we have all of our pairs up here. All right, so that took us a half hour just to go through just how I have my screen set up. Hopefully you're able to follow a little bit on that, but I know that some of you have been using this for a while, probably thought that was a little basic, but you got to start with the basics before you can get to anything more more advanced than that. So with that being said, so the inputs, go 1 hour, go to totals, I choose candles, and then on the levels, I put in a 5, -5, and a 0 line, and those show my individual imbalances. Trade manager, all that's going to do is just show your open trades, and then the chart setup, I went through that right at the beginning. So let's go through, because this is where this came from, was from our live trading room. Let's go through some of the simple methods we go through in our live trading room. And these are all, a lot of the ones that we do. Sometimes we'll use a 4-hour chart if I see longer term, patterns or levels being hit in the market. After being in the market for 20 years, folks, the only thing I can say is the movements in the market come down to 3 simple movements the market will make. It really does. The 3 behaviors of price action in any market. Instead of using MACD, stochastic, or moving averages, it comes down to 3 things: consolidation, momentum, and reversal, or retracement, if you will. These are the 3 behaviors that typically every currency pair has each and every day. Is at some point they will consolidate, which means trade in a range. Momentum, there's sometimes that they'll make and they'll exert, generally momentum is the largest move of the day. That's the largest directional move of the day. And reversal of a retracement, in an uptrend, reversal and retracements is when things make their higher lows. And then in a downtrend, reversal and retracements are when things make their lower highs. And you should know that at this point. An uptrend is a series of higher highs and higher lows. Downtrend is a series of lower highs and lower lows. Things just don't go straight up and straight down. At some point, there's going to be some profit taking that moves things around. This morning's class actually gave us 3 perfect examples of the way we look at this. And generally speaking, what I use is just simple support and resistance. And it's amazing to a lot of people. And throw in a little Fibonacci, which is actually labeled under support and resistance, really. And that's really what I use. And like I said, full circle from being a big indicator guy, using all kinds of different oscillators and whatnot in my trading, to going back to trading naked on my charts with just simple support and resistance levels. So let's go through one of the first things, and this is something that we went over this morning. We'll go through consolidation. Consolidation breaks is a big thing for us. When the market is consolidated, when it's trading in a tight range, this is what will, for one thing, PitView does not work very well at all nor does any indicator when the market is moving tight in a range sideways. When something is in a tight range, and I'll pull up an example here for you. Well, let me pull up euro dollar, because this is the one that we traded this morning off of a consolidation pattern, and I'll just zoom in here. Like you see right down in here, you see like right in this level and this is over what, this little range right in through here, this little consolidation range. This lasted what, about 12 hours, 14 hours right in through here. When the market's in this tight of a range and you're trading swing trading, some of you might try to buy and sell off these, little bounces, but this is when most indicators do not work very well. You can see PitView, the indicator down in here. You see my -5 line and my +5 line. This is the email that I get from students. Well, I see this thing going -5 +5, -5 +5, -5 +5 all throughout this time frame right in through here. Okay. Well, look what the price action is doing. It's not really breaking out into any higher highs. It's not breaking out into really any lower lows. It's just consolidated. And just like any indicator, this is a liquidity provider action right in through here. That's basically telling you that they're doing a lot of action on the bid. They're able to do a lot of action on the ask price, and they don't have to move the market that much in order to do it. And that's, if they're making a spread between the bid and ask of where they're exchanging money for one person to the other and making their commission costs as a liquidity provider of just making a market, that's their I'm sorry, I'm having a hard time speaking today. That's their bread and butter. That's how they make just a lot of money off transaction costs. So no, it's not going to work very well when the market is this tightly consolidated as it is right in through here. Now, two things to notice here when it comes to consolidation, because this goes back to, and I'm sorry for assuming that some of you were in the morning class, so let me just pull up our trade from this morning's class, because we usually have been breaking things down into trading dollar strength and dollar weakness. Here's our dollar strength trade today. This is the one that we executed during class. That's this bad boy up in here. That's trading at a 26 pip profit right now. You see here, we just say euro dollar, we're going to sell into support break, 1 hour charts executed during class. Now, what do you notice about this? You see how consolidated it was? And you see that our execution right down in here on our chart, and I can pull it up on the line, the live chart's right behind it, our execution happened once this thing broke consolidation. Now, this is extremely interesting, so I want you to follow me very close when it comes to looking at the PitView indicator, or some things that you could have seen on the PitView indicator that would have told you that market makers were favoring the sell side of this equation. And this was, again, the trade that we took this morning during class. First off, let me put up where our sell trade was taken, which was right here. This is where we took our sell this morning in class. What do you notice? Well, I can actually take off this resistance level. We weren't even looking at trading any type of resistance here. I'll just make this, you see this, you certainly see a support level. This is just horizontal support, and you can see the market is consolidated during this time. Essentially, our strategy was to sell. This was right at the 110 level, by the way. It was to sell if it made a sustained break below the 110 level, and if it made a -5 on the PitView. You see euro dollar right now is at a -9.54, I believe, on the 1 hour totals. So one other thing that you saw occurring when this market was consolidated in through here, you can't just look at the PitView indicator +5, -5, +5, -5. For one thing, as it was coming down here, look at what was happening with the indicator. This is called a divergence. The market was moving sideways, and what do you notice here on the indicator? The indicator was making lower highs, if you will. The indicator was also, you can kind of see it in here, was also making higher lows. So you can see the indicator itself on the candlesticks was starting to tightly consolidate, as was the market. So these sideways moves, you know, they weren't really breaking out in any higher highs or higher lows. The price action wasn't breaking out in any new territory. But what happens here is now that the market makers are consolidating their bid and ask action, look at this big red candle and look what happens here. Okay. You see how this breaks down into a negative, it goes way down. The PitView indicator was making like almost a pennant formation over the course of this consolidation right up and through here. And the time that it actually broke out of this consolidation, which was on this big red candle right in here, let me just kind of bring this over to the side. You see that that's when this thing really made a huge break into a big sell imbalance right in through here. And that's where we've stood ever since. Now, I know that it's gone +5 from there, but look what the price action's been doing. It hasn't really did it break out into any higher highs when it went +5? No, it didn't break out into any higher high. You know, it didn't give us any indication that it was going to break out in the other direction. It just went, you know, like I said, it broke out into -5 as it was breaking out into a new level. It consolidated sideways right in through here. This right here, when it went +5, this is an inside candle. It didn't even make a higher high throughout this consolidation. So this is what we call a consolidation breakout right in here. And that's one of the most simple ways to trade the market, is when you see the market moving into a new level, when you see it moving into a new position. And if you even went back even further, you can see like right in here, as it broke through into even the daily lows on this next candle, this red one, this red candle, when it actually came down, was still in a -5 territory right in through here as it started breaking into new lows. This is what we would call a textbook consolidation break, essentially, where we put in an order to sell. Actually, we put in our order to sell right when this candle opened right in through here, which was 1.09690. And we put our stop right up above this swing high right up in here. This red candle, the top, was right above the 110 level. And, you know, risking 45s to make 45, risking 45 pips to make 45 pips. And that's where we stand right now on that swing trade. And again, I know it's a simple strategy, but when you look at things as a whole, as far as when things break out, it oftentimes can help you out quite a bit by just recognizing what the market condition is and what the PitView condition is. The market's barely moving right in through here. PitView is going crazy up and down because liquidity providers are constantly changing their imbalances. But not only did when we got an actual break through this low, we also got a break into a lower low on the PitView indicator right down in here also. I hope that makes sense a little bit to you. Now, what could get us out of this trade? Well, I know it's gone back up. A great place to put your stop at this point on your euro dollar trade, if you're already short, and that's why I kind of left it to the class here, is now that we've broken into a low and you've seen the PitView indicator come back up, and it made a +5 and it's going back down now. You can see it's at the -8.27 right now. It hasn't updated down in here yet. The good thing to do here is now that the PitView indicator made a lower high, you know, for the day, and it broke up into a +5, is use what we call a 3-bar reversal. Look back at the last 3 candlesticks. Here, let me zoom in a little bit. Look at the last 3 candlesticks. 1, this one's an inside candle. 2, 3 candles. And we can move our stop down to the high of those 3 candles. Keep our take profit level in, but at this point, now we've minimized our risk on the trade, and it's just a way of managing our trade. It's still going down. We don't really pay attention to the fact that it made a +5 here because it never made a higher high. It never broke out of that consolidation. So we're still good on our downtrend overall. Plus the euro is at the bottom of, I hope this is all coming together a little bit for you. Plus the euro is at the bottom on the total view. It's being heavily bid right now, or heavily offered. The dollar's right near the top, being heavily bid, one of the stronger currencies for today. So the trend is still intact. All we have to do from here is, when it's gone +5, instead of just closing out our position, is just put our stop right up above these highs right in through here. And the trend is still intact, if you will. And we've minimized our risk quite a bit. So consolidation breaks is something we do these a lot in our trading classes. One of them that we did the other day was right in through here when it made this little double top formation, when it started to break down to the downside. Right in here, it's very hard to see, but actually the PitView indicator made a lower low right in through here. It went down and broke through this previous low as it was breaking down out of this consolidation. This is another one where we went short once it broke down to the downside. More on the PitView indicator. I'm going to go through a little bit more in depth on the PitView indicator on Friday of different ways to trade it, looking for it to consolidate. Basically, you can do candlestick analysis. You can look for divergences. What I mean by that is when the market, for example, is making higher highs right in through here, you see how the PitView indicator is making lower lows or lower highs as this is making higher highs in through here. It can kind of show you that you may be in due for a direction when there's little divergences between the indicator and the overall direction of the market. I'm getting way ahead of myself, by the way. We're going to talk a little bit more about that on Friday. But simple thing here. Consolidation essentially comes down, like in this case, our consolidation, and I'll name this consolidation. What did we look for here? Consolidation essentially comes through with PitView. We got to break and it also broke out. So that's an example of trading consolidation right in there. And again, most of just horizontal support and resistance levels. It was breaking into a new low as the PitView indicator was breaking into a new low. It was also breaking out of a consolidation formation or a pennant formation. And as it was doing that, it gave us a confirmed trade. And I hope that makes sense of why we're still in this, is because the trend is still intact. It hasn't broken into a higher high. But now that it did come up a little bit, all we've done at this point is just make sure that we put this stop right up above the high of those three candles, and we can continue doing that as it moves down. So it's a perfect example of trading consolidation, or just want to into my thought process of why we take some of those consolidation trades during the live trading room. And I want to remind people that may be coming into class for the first time, this will all come together much better for you if you do come into the live trading room. It's free. If you're a PitView subscriber, it's free. There's no cost associated with it. And even new users to PitView, during your trial, you can come into the live trading room as much as you want. It all comes together a lot better for you when you're doing it on a day-to-day basis of looking at these different strategies. Now let's go through another one that we were looking at today, and I'm going to switch gears here, and I'm going to move on to the dollar Swiss. And I think, I'm not sure, let me edit something on here real quick. I think on my inputs I forgot to change the liquidity provider type to totals. That switches things around quite a bit. Let me add that indicator back in. I think I had it on leaders. In this case, the leaders looked a lot like the totals, so -5, -5, 0. There we go. All right. Dollar Swiss is one to where we were looking at this one earlier. and it has a lot of the same. This is more of a momentum trade, is as something's already made momentous moves of what we're looking for in order to get into the movement. And this is a good one right in here because of the fact that it was something to where we've traded this actively, the dollar Swiss, especially when it comes to momentum and trading into retracements, if you will. The storyline for dollar Swiss, and let me pull up our trading sheet for this morning, was we were wanting to buy dollar Swiss on a resistance break. And this is a momentum example. When I say momentum, it's because you can see here the dollar Swiss was already consolidated a little bit during the Asian session last night and going into the European session. By the time we were looking at it, we were already short on the euro dollar trade. But one of the other levels that we liked on the dollar Swiss was we've been really trying to buy breakouts on the dollar Swiss if it breaks out above this 9,500 level. You can see that it already made a momentous move here. And let me put this high right up in, oops, sorry. This, there's the high right there. Right at about the 95.30 level. This is one we were looking at because this is already making a momentous move. It's already in the midst of a trend. And one of the hardest things to do as a trader is when something's in the midst of a trend, when it's making an actual, exaggerated move to the upside. Like you see here, the dollar Swiss was making a move of 100, 110 pips, and you're looking for a level in which to get in. Well, in this case, what we're looking at is we're looking at the previous high right in here. What we wanted to do is we wanted to gauge how, what would be a good way to get in on a momentum because it's already moving up. You can see almost the same break that we had on the euro dollar. You see how consolidated the PitView indicator was when this was going sideways, and it kind of finally broke out into a right in here as it was breaking through high, and it finally broke out into a plus 5. And we were looking for, okay, well, if it comes up here and breaks to the 95.30 level, it already broke through 9,500 and it was starting to break through the 95.30 level. I was telling students in class this morning, go ahead and take any type of break above this 95.30 level. And if you see the PitView indicator start to make a higher high, if you will, then we want to go ahead and take it. This is one that I executed here actually right before class. I'm down a little bit on it because it was making these lower highs right in through here. And right in here it went to a plus 5. You can't see it that well, but right in here on this candle, as it was starting to break above 95.30 is when I got in. I actually got in on the start of this candle as it was kind of making more of a sustained break. Obviously, I didn't know this big red one was coming through because I can't predict the future, but it was also starting to break out of this little long-term pennant formation. I got in right at the top of this candle right in here, by the way, at 95.43, and I have my stop right below the this consolidation pattern. I have right below the low here at 9.94950. This is more of what we call momentum because the dollar Swiss was already moving up. What we've seen a lot of with dollar Swiss was the fact that there's been some the Swiss National Bank has been intervening quite a bit on the Swiss currency. So every time it's approached the 9,500 levels, we've been looking to trade sustained breaks above those levels because I think that if it can clear those levels, at some point it's going to have a larger move to the upside. So that's why we call this a momentum trade, because it was already moving and we wanted to get in on any indication whatsoever that it could move higher. Came up, broke through, but at this point it was still not making a plus 5. Where we got into the trade is when it made a plus 5 as it was breaking through that 95.30 level. Sometimes you get the elevator, sometimes you get the shaft. You can see it's at a minus 90 now, but I still have my stop at a pretty good position here. I still have it right up below the 9,500 level. So we're still willing to give that one a shot to see if we can make a 1-to-1 risk reward. If it goes to a minus 5 in here, once it's broken through into lower lows, we actually could probably go ahead and close this trade out for whatever loss that we have. That would be an indication of how you use it, PitView, to also get out of trades a little bit earlier. And all you got to do really, folks, is just look at the indicator itself of what it's been doing. It's throughout this time frame right in here, amateur 12 hours or whatever, it's going nuts. You got to look at it a little bit more close right in through here, because this is where the rubber meets the road. We wanted to get it on momentum when it broke through this high. It was at a +5. Unfortunately, it's down for us right now. But this is a situation right in here to where this can give you an earlier indication to get out. For example, if this is, now that this is breaking into lower lows, it started to break above the high. You see right in here, you have these 3 candles that are all like basically inside, right in through here. Started to break out. This looked like a good breakout. It looked like dollar Swiss was going to make a move higher. The indicator was going to a +5. It had already been breaking out into higher highs right in through here. Much like the euro dollar, we were expecting to see if this could make more of a sustained break above the 9,500 level, which it did not. It's going against us, and I don't win every trade we do in the live trading class, by the way. Sometimes we get the elevator, sometimes we get the shaft. If you can't deal with that, you probably shouldn't be trading to begin with. This is a good little example here, though, of a losing trade that we have, to where if I were to look at this dollar Swiss indicator on the 1 hour totals, this is a situation to where it is starting to break into lower lows. It's starting to break out of this little consolidation here at the top. If this were to go to a -5, I would probably get out. Unlike the euro dollar, so here, let me pull up the euro dollar real quick. I'll actually pull it down here also. Unlike the euro dollar hasn't broken. You see, the euro dollar hasn't broken into any higher highs at this point. It's still in the midst of a trend. That way we can just keep on moving our stop down and tightening our stop on the euro dollar. Because even though it went to a +5 at one point, it's still been kind of sitting down here as far as the negative totals go. I forgot I had the leaders on that. This is one to where it's been making lower highs right in through here. We can actually move our stop down, because if it goes to a +5, we will certainly be getting it, and it's breaking into higher highs. We would certainly be looking to get out from that position. The dollar Swiss, but it hasn't done that yet. You see, the euro dollar has not made any higher highs through here. It's just sitting there consolidating there at the bottom. That's why we use it as a consolidation example. Dollar Swiss, we got it on a momentum trade, and in this case, it is starting. You see, it is starting to make a lower low right in through here, or a lower high. It's starting to break out of consolidation to the downside. All of this right in through here. That's why we have our stop right below this low right down in here, right, which is right below the 9,500 level, because it's tightened up a little bit more. But in this case, if this goes -5, now that it is breaking into a lower low, it is breaking out of consolidation to the downside, that would be an example of, yeah, the PitView indicator would probably be a leading indicator to that, of telling us to get out. So that's one that I'll probably keep on my screen today on the dollar Swiss. And if I see this go to -5, if it hasn't stopped me out already, if I see dollar Swiss go to a -5, then I'll probably be getting out this afternoon a little bit earlier, because it is breaking into a lower low. At the end of this hour, this 2 o'clock hour, what I'll probably do is just go back and count back the last 3 candles and tighten my stop up, perhaps even a little bit more, to make sure that I don't let the trade move against me as much. I'm hoping this makes sense. If not, I can fill in all the blanks on Friday afternoon's class, because the point of this class was really just to go through how I set up everything and how I set up the indicators, and to give you a brief introduction on how I trade consolidation momentum. Now, one of the more popular ways that we trade in class is also reversal and retracements, which is essentially after something's gone into what we call an overdone condition, or it's made some kind of pattern in the midst of a retracement, also looking for opportunities in which to buy it. I'll give you a little bit of a preview for that, and that's what we'll continue on Friday. Hopefully this has been helpful. But here's an example of trading reversals and retracements right in through here. I was screaming this week telling people, hey, if if the dollar Swiss is going down, if it goes into what we call the retracement zone, which is right down in here between the 61.8 and 78.6 levels, this is a Fibonacci retracement where I just went from the swing low to the swing high. I was telling students on Monday, either buy it if it breaks into a new high, or if it retraces down into these retracement levels. Once it gets into this zone right in through here, this is what we call the retracement zone between 61.8 and 78.6. We call this the retracement zone. Once it's in this level, if it goes +5 on dollar Swiss, buy it. That was our trade on Friday. Have to zoom in a couple of times on that. There we go. Now you see here, once it gets into this retracement zone right down in here, you see how the PitView indicator, it hadn't made a +5 yet. And then once it's in this retracement zone right down in here, this was after the retail sales yesterday morning, by the way. It went -5 and then it went +5 right in here on this red candle. PitView in retracements works extremely well. And so we were able to get in. The close of this candle was right in here when this went to a +5 once it was in this retracement zone. We're able to make a quick 30 to 40 pips right from the get-go, right off the back on this trade where we captured a 1-to-1 risk reward. This also formed what we call a Gartley pattern, where it made an ABC correction as it made its move down to those levels. That's called an A, that's a B, and this would be considered a C correction. It's a very tight ABC, not as pretty as some of the other ones. This also made a Gartley pattern right in through here, where we were able to get in on a retracement. And then right in here, this would notice the PitView indicator right down in here. This is where it actually made its higher high too, was right down here when it was in its retracement zone. And not until it got into those retracement levels where we get a higher risk reward, natural risk reward ratio on our trades, did we actually take it until it actually broke into a higher high. Right in here, we tightened our stop when it went consolidated again, and we were actually able to take a trade off this morning in class. Throughout this consolidation right in here, all we did was we had our stop at break even. If you can believe that. We had our stop at break even, which was right down in this level, right down in here. And as it started to move up again, we were able to reach, I believe we made a total of about 100 pips on this trade. We captured like 30 pips on right back in here on the initial move. And we ended up capturing a total of 100 pips because we captured 70 pips on our second lot for our max profit levels. And you can see here, this never worried me. What a lot of you email me on when this thing's going crazy, like during the Asian session and overnight, this never worried me right in through here because we had our stop at break even, and look what the market's doing. You know, unless it's breaking into breaking out of these consolidation levels, you're never really worried about these things. I know I've been going a little over time here. It's time for me to kind of end part one, and obviously the reason why I split this into 2 sessions is so I can kind of fill in the blanks in the second session. Let's do a quick review of what we went through. Big part of class is, especially for you live trading students, I wanted to show you exactly how I set up my PitView. It's not that difficult. It doesn't take having 5,000 different windows open. Just 3 pair view windows, a total view window, which I do to kind of gauge the overall market conditions, of the overall market strength and weakness. Pair view windows are what we use for our signals on the 1-hour totals. So I hope that helped out a lot just going through that. If some of the other things that we've gone through in class today has gone over your head, don't worry. We'll fill in those blanks on Friday. Went through the PitView indicator of what the inputs I put in for the swing trading that we do normally in the morning classes. Trade manager, that's just essentially what's up in here. Chart setup. Simple methods for swing trading. What I showed you is, I hope you were able to get a little bit more of clarity on consolidation and the fact that just because the PitView indicators are giving you +5, -5 signals doesn't mean that you're always taking any signal that comes across. It's kind of like moving average crossovers or MACD. you're not constantly taking buys and sells every time a MACD crosses positive and negative. You know, there's what we call a, you know, trading, you have to use there is still a bit of discretionary trading knowledge that you have to trade the markets. Meaning if it's consolidated and hasn't yet made any type of higher highs or higher or lower lows on the PitView indicator, it's just giving you false signals, if you will. And PitView is just like anything else. It gives false signals, especially when the market is in tight consolidation ranges. Believe it or not, using these swing trading methods on the 1 hour time frames will also help you in your short-term trading if you're looking intraday at the markets. Because if you're looking at these longer term levels, when shorter term breaks happen, it'll give you a lot more clarity on how to trade the market. Let me go ahead and save this, by the way. And we'll continue on with some of these trading sheets on Friday. PitView swing trading 0715 715 15. And what I'll do is I'll share this with you under your handouts. On the GoToWebinar, if you look under handouts, the Word document that I was just typing on, the notes, and like on Friday, I'll be able to share like the PowerPoint with you and stuff. PitView swing trading right in there under documents. You can go ahead and download that file.